All right, good evening, guys. Ken of Tortoise Capital, Nightly Strategy Podcast, November 17th, 2022. So, I'm just reminded of the importance of Kaizen, a Kaizen mentality for continuous improvement, willingness to change, communication. It's the opposite of innovation, which is a radical form of change, which the Japanese would call kaikaku. Kaizen is a small change, continuous change, changing to become good. The 5 foundations. There's not a lot of difference between the values of a true story circle and the elements of Kaizen and teamwork. It's doing the work ahead of time, coming to the circle, creating quality in adherence to the standard. Afterwards, we talk about self-improvement, team improvement. It's good for the discipline and morale. Get you in the habit of telling the truth and listening for the truth and wanting to hear only truth. This one is key, the elimination of waste or muda. And in many cases, it's the muda is in surprising places. Like Toyota will measure how much air they are shipping in their packages and determine what the cost of shipping air to their customers are. So they want to pack that thing just so. No extra space. We were talking about the wheelbarrow exercise yesterday. And imagine you have a pallet that is stacked with bricks in your driveway. And you've got to take that over here to the work site where you're building a wall. So I'm over here building a wall to keep out the wolf. And so I load a wheelbarrow quickly full of bricks, and I start taking it over, and then halfway I lose control of it because I've used poor position sizing and I dumped all the bricks out onto the ground. So in our exercise, we want you to feel the feelings. But at some point, you realize that while you're deciding how long you're going to feel those feelings, the task is still waiting for you. The task is to move those bricks over to the wall. And the longer it takes you to feel those feelings, the longer it'll be before you get that job done. I mean, you could always decide, hey, you know what? I feel so bad about dumping those bricks. I've decided I no longer have a priority to finish building the wall. My new priority is to just leave this alone in disgust and then walk away. Well, then, now you got to decide what to do. How long are you going to live with that visual reminder of a job incomplete and the fact that you learned that you hadn't loaded the wheelbarrow properly? Well, are you going to move those back over to here and then figure out what to do with the load of bricks that are no longer going to the project? Or are you going to learn from this and load the bricks properly in a load that you can manage, take it to the job site, unload it, come back and get the rest of the bricks and move them back over to the job site? Waste has to do with the waste of time as well. You know, how much time am I wasting reacting to the new situation I find myself in? What if you had good reasons to believe that you could handle that load, and maybe it was an external event that black cat crossed your path? somebody sneezed. You know, the wheel went flat. So, in a single Yeah. So in our little exercise, what you might have thought was a waste really was just how you interpret it. So if you had that pile of bricks over here, even though they fell out of the wheelbarrow onto the ground, and you decided, hey, what I need to do is just take half the load, stack it properly, and then carry that to the wall, that really wasn't a waste. You still carried a large pile of bricks halfway there, and now you do it in two. You still saved. So that original effort wasn't all bad, but only if you failed to learn about it. So the idea of muda, waste, is really a subjective call that you make concerning what you think was wasted effort or motion. It may not be. It may have been that the noticing the waste as waste now created a learning moment that is sufficient to reduce future costs in a large way. And so maybe that waste was simply the price of learning a really powerful lesson, and it has to do with what was in your mind as you were evaluating the situation. So one of the reasons that it's worthwhile going through these frameworks and then being reflective and then being creative on how you reframe it is that you can gain some surprising insights just from that little thought experiment. But really, it's an exercise in feelings. So that's one of the things that we do in the course number 4 in the foundations, the applied psychology to common mental states, and what we can do to learn from those, which at times start off feeling frustrating or anger generating, but then become opportunities for learning. So just wanted to share that one with you. All right, so here's the sniper trade of the day. We're on 3-minute charts as usual. There was the previous day's close was well to the north. Yeah, the previous day's trade was well to the north, and there was a gap down to here. It went to the bottom, went all the way back up here to the top, and then came and closed right here. So that establishes the OR3 boundaries as here at the top and there at the bottom. So it closed here, it opened here, it went down to the edge, came to here, opened here, went down and broke below the 3-bar or the 3-minute OR3. So that generated the entry short, and which created this standard risk box because of math. So that's our standard risk. And notice that in this case, that standard risk was really only 1/3 of the size of that opening range 3. So that's how big the gap in that initial 3-minute move. So we're short. Why is is that giving me grief? Down this low, comes back up to the edge, bounces. By this point, it feels like it's making higher lows and starting to penetrate into my risk box. So when it comes back out here and then starts to reverse again, I just cash it for that. So that initial trade, which started off promising, started getting higher lows. It penetrated the box. So when it came back out and I had a chance to make a little bank on that, we just took it for about a 0.2. All right, so now what we have, about 20 minutes later, the smoke has cleared a little bit. We had the RL10 reverse cross the baby dragon. The price entered the dragon. It could not make the move all the way back up to the PSAR, but instead just rolled down and then up again, so it failed to fail further. So what we notice is that we now have a CATA 2 formation because we have the R10 wiggle where it fails to fail and resumes. Now I have the regression line crossing the dragon. That's a good thing. And then price takes out the PSAR. And so we like that. So we get our standard entry with a standard risk box. And off we go. Check or hold. Standard exit. Gave it some room to run. It moved about plus 1R. Then it couldn't handle it anymore. You would be okay getting out right here at a 1, 2, 3 exit. Because you crossed the baby dragon. It flirted with price in the dragon, came out. But then when the RL10 comes into the dragon, I just take it at the spine and capture maybe a 0.4. And this one was probably a 0.2. So this is a grinding day. It's just not getting much traction. So we're at about 0.6. In keeping with the upward movement of the day, I take a CATA 2 entry here because we have the R10 wiggle. We have a RL10 higher lows. It failed to fail further. We get the PSAR cross, standard entry, standard risk box, looking to go long. The top of the RL10 and the PSAR, that's where it gets interesting because it will have cleared resistance. So this space between my entry and that price level is simply the tactical space. And the only thing I want to do in the tactical space is get my risk from here above my entry, which was here, so that I can lock in that little wedge, that no lose plus dinner for 2. That's like the doorstop that keeps that thing from slamming shut in my face. So the worst thing that could happen is that I'm going to come out of this with an exit right here at plus $100. That's a good position to be in psychologically. All right, so let's see what we got. Grinding, grinding, grinding. The first sign of buying interest that is sustainable finally appears. So again, when we draw this line across, not surprised that it's finding resistance right here, which is where it found resistance before, but now this move to the upside is starting to feel perhaps there's some potential. That's really the first sign that we have that this trade really wants to go. I mean, we had this acceleration to resistance, but then hesitation, and now we've got a break. So my stop on this little formation right here is probably the 2-bar low. I'd like it to be above the resistance that it just broke through, so I like to have my stop there, because if this fails, I know it's going to come back through here, and I don't want to pay for it down here. I'm just going to say, look, I'm going to keep all of that tactical trading gains. That's now my money. All right? So all of this in here is mine now. So I like putting my stop there. And that's sort of the second stage of the science project. I screwed up the markup on this one. This is a exit right here. I marked it up on the daily. That's an exit. And then that was an immediate re-entry here because it did not fail further. So this is that's about 1R. And then this is the re-entry on the PSAR flip and taking out the RL10 hump. So that's the exit at the PSAR dot. Check or hold. Okay. So we've got the next kata 2. Now the risk box is here, but you're not wrong if you decide just to draw your stop here and just say, you know what, if it violates below the RL10, I don't need to wait to be down here to be out. Just the fact that it violates this support level is enough reason to get out. So I'm really only even risking half of the risk of the standard risk box, to be honest. All right. Now this thing in the first 4 bars gives me a nice move. I probably want to be right about here. And then when this holds and I'm starting to see higher lows, I might decide just to, you know what, let me go to the 2-bar low again. So I don't care how you get to here. You might have just picked the southern skin of the dragon and then just accelerated. So your pathway might have looked like this, following the spine or the lower or the higher skin of the dragon, or you might have just elected to use the PSAR and decided, you know what, I'm just going to lock in. I'm going to lock in that piece. So I don't care how you get to here. You got to decide the pathway and how actively you want to manage that. But my spider sense is that you need to be about here on your stop so that you can lock in that wedge of a gain, especially as choppy as this has been. I should have had a better exit. I gave it a little more room. I don't like that decision. My decision was the PSAR, and the difference was this little wedge. But I did keep the no lose plus dinner for 2. So live with the consequences of your choices. If I'm looking at this from a 1, 2, 3 perspective, here's the highest high. This one made a low without making a new high, so that now becomes bar 2. This is bar 1. And now on bar 3 that's live, as soon as it breaks below the low of bar 2, that's what a 1, 2, 3 exit looks like. That's what a price touching PSAR looks like. This is what a PSAR flip looks like. So this is approximately in the right place. Over the long run, that's the one that you must take. You can think about trying to preserve extra pieces. A lot of that's going to be psychology and your state of mind and how aggressively you want to capture some gains. Like if the intraday score matters to you, and it matters to me. I like to know where I am. I like to play from the front. Sometimes I might be a little more aggressive, and maybe market conditions and sector makes me a little more aggressive. But you have enough signals in here to be able to make an informed judgment in the same way that you like to have road signs when you're driving through tricky roads. There's the RL10, there's the rollover, there's the crossing the baby dragon, there's entering the dragon, the spine of the dragon, the lower skin of the dragon, the PSARs, the RL10 crossing the dragon, the RL10 intersecting the PSAR. So there's about 7 or 8 little roadside indicators that you have as you are approaching what's clearly a decision. There's a decision that has to be made in here, and you've got enough indicators to give you some sense of timing. I have been committed to the long side on this one all day, and it was still felt like the correct play. So I have another Kata 2 working on this one with a low, and then a higher low on the RL10, and we get the PSAR flip again. This is not evidence of, urgent selling. And most of the move of the day has been up. And then any breakout north of this line is a new high of the day. So this is my tactical trade space in here. And if my stop is geared at half a risk box because of where the RL10 is, then all I really got to do is get my stop above the entry, once again, so that I can lock in this wedge and get to experience no lose plus dinner for 2. This is where it becomes a science project academically and all that when it gets truly a new statistical high. Another fractional win. I actually had higher hopes for that one because when it came back and tested this low, it held. If anything, slightly higher. And then I was feeling good because it broke above the resistance. I was really feeling good in here. And then once again, there's bar 1. Now it made a lower high. That makes, when it closes here, that makes this bar 2. And so I took a 1, 2, 3 exit. But that also coincided with the PSAR and the RLXD, so that was just clearly time to get out. There's 1 unit of risk, so this is about half an R. So we're just hitting singles and making contact. I missed the Kata 2 because we were so close to the end of the day, but that's what that Kata 2 would look like if you were going to try to trade that last little section. But that was like the last half hour of the day, and I don't like to monkey around with that. It's usually not that orderly. So today was kind of a quiet day, and we probably got 2.5 R out of this one. When you total it up, it was some serious grinding today. Sometimes it's like that. All right, let's look at where we are in the market conditions. The RL10 has rolled over on the 150-day look back. That's 150 to here. That's the 120, 90, 60, 30, 20, 10, 5, and then the 1 day. So, as we get closer, we get a little more fidelity. I still like this double bottom, caught a 2. This is a natural rollover right here. As long as it holds higher than this support level, like if tomorrow it begins to resume, this will look like a caught a 2. So this is part of the orderly backing and filling that you get, and there was a lot of that in here. And that time it got all the way to 430. Sometimes it doesn't. Sometimes it rolls over. So I'm not making a prediction. I'm just anticipating it could go up, down, or sideways. And I've got my targets mapped out in both directions and know where it can go without surprise. Just following price. That's all I do. That's my prediction. I predict I'm going to follow the price. This is the daily bars, 30-day look back. And I think you can see today actually closed better than it opened, because that was yesterday's close. Here was the gap down near the low of the day, and then the S&P was trying to recover. I actually take that as a positive sign that it held above the previous resistance. That resistance may now be support, and it's moved this far off of that support level, and it's got a short distance to go to be very interesting. So a small tactical space, cautiously optimistic as we noodle around near the 200-day moving average. The 30-minute was really a small range day today, so nothing to worry about. The absence of volatility, this was today's full range, and that's what it closed in the last half hour to close well. And again, it's a short distance to the top of the stack and beyond. So nothing wrong with that. All right, let's look at the sectors. From a distance, we can see the S&P was off about 0.3. The Russell Tech Treasuries off 0.9 and 1%. Then tech was right there with the market. Not much leadership there. Diamonds were better at 0.01. That was the cutoff line between winners and losers. And emerging markets was the best index at 0.18. So not much room to choose between the indexes at all. That's how narrow the trade range was today. All right, let's look at the winning sectors first. So again, the S&P at 0.3, minus 0.3. The first cluster was oil exploration, Aussie dollar, and consumer staples, up to basically minus 0.03, or basically all this was just flat. Then marijuana, tech, FANGs, and commercial real estate in the green, a fraction. You had Bitcoin at up 1.6. Individual companies, Robinhood 1.6, Apple 1.3. Two of our three chips, there's Intel and Texas Instruments up 1.1, 1.2. Our other chip is back here down at NVIDIA off 1.46. So these two chips have been better than NVIDIA lately, Intel and Texas Instruments. I'm in favor of Intel. Our two tech leaders, the traditional tech leaders there of Apple and Microsoft were both better than technology in the market, so those two get a plus forward-looking momentum there. Devon Energy was very close to flat, very close to the market. Not much to see there. All right, let's look at our losing sectors and positions. S&P again at minus 0.3. The first cluster of weakness, finance, Mexico, real estate, lumber, Brazil, agriculture down to 0.9, minus 0.9. The next cluster, clean energy, VIX, materials, Ethereum, the other lumber down 1% down. Biotech, consumer discretionary, and uranium down 1.5. Blended commodities and wheat and precious metals 1.6. Tesla minus 2. ARC innovation and lithium minus 2.2. The worst performing sectors, oil and ARC genomics 2.5. Here's our metals. There's Alcoa and Cliff, and there's U.S. Steel. So our little metals group. U.S. Steel was the best one at minus 1.4. Cliff and Alcoa minus 3. So lots of weakness. Even the weakness, though, was not really catastrophic today. Today was really a backing and filling kind of day. I mean, waiting for news to develop that never really developed. So the lack of selling pressure to me is praise of a kind for the upside. So on the tactical side, I'm just slightly more optimistic today than I was yesterday. All right, let's see how the team traded today. Here's Tim, basically flat in Alcoa. I like the gap down and taking the short at the OR3 and then getting paid a fraction. I like this RLXD here or that entry at the PSAR flip. You saw that similarly to the trade I made in U.S. Steel, and that's that first move that we got paid in U.S. Steel. Once it gets north of the VWAP, I'm happy. The fact that it failed to fail further and that the MACD is ticking up, I take that as a legitimate entry all the time. That's what a morning hook feels like to me. I like this rolling over and getting short as it crosses the VWAP. I love the quick, cutting that thing quick. Now I notice a low and a higher low. Even though you've stopped trading, you should learn to recognize that as a very strong signal because it's north of the VWAP, it's a higher low, and we're well into the day, and so all of the morning shenanigans are over. It failed to fail further, so the next place is up. And most of the market was slowly grinding up today on low volume, low volatility. Devon Energy is 0.9. And I want you to notice that that's 0.9 without catching the early move, but getting paid, and getting paid. Here's a PSAR flip, and here's a COTA 2, and span of control. But that's why you want to push your boundaries, because that's how you build capacity, is by learning to work on the slowly add weight to what. All right, so I feel like we missed this short on the rollover and then a breakdown. That's a short. That was a reasonable effort on the long side. There just wasn't much room in Tesla today, not much range. Apple, I thought this was nice work in here to pick up this, and you got paid, and I love the re-entries. And then remember, just stay with them. That's what a morning hook looks like. A gap down and then failure to fail further, and then a reversal across the VWAP, and then crossing the dragon. You want to take that one all day. Here's Agnieszka. I love your resilience. Could have been better, but that's how it is. The learning step was my trade is not me. I can accept a loss and move on because I followed my rules and I'm on my journey. I think this short could be sooner. When this rejects the dragon and you get that R10 wiggle, that's a legitimate trade. And then this would be, instead of getting in here, you're getting in here. I like the long. I'd like to see you cut it there. That could be where your short is for a scratch. Yep. This looks like 1 minute charts to me. I still think that is pretty jumpy. I would prefer like about the 3 minutes. See what that does for you. So my brother was under the weather a little bit today, so he was trading only Merc. He's on a 10 minute. So when you get PSAR flips on a 10 minute, that's significant. So there's the flip. There's his standard risk box at the bottom of the dragon it works out to. He adds automatically at the plus 2R out here and brings home 2.7. That should make you feel a little better. And then later in the day, well, I guess that's earlier in the morning, actually earlier in the morning. It holds support at the PSAR, crosses back above the dragon, gets a risk box above the dragon, long, automatic second position, automatic third, all out for 6.8 and a 9.5R day today. That should help you make you feel a little better. Just checking in with the AGX, or the, not AGX, AGTHX. So here he is on the 9-day chart, fractal patterns. So this is going back, here's the start of the year. And that's what a full year's worth of trades on the 9-day looks like. So the PSAR flips on a 9-day chart are significant. Like you get that trade that lasts 18 months, and the PSAR was your friend the whole way up. And here's the PSAR flip. You got to take that exit signal. And sometimes you can't go short, so just staying out of that mess. Now here's the PSAR flip. And then that essentially is a scratch because the PSAR flipped again, so you're no longer long. You'd have to see the RL10 cruise back up into here, and you probably could get long in a couple weeks around 60. That's what it looks like longer term. The 9-day. How cool is that? Answer. Very cool. I'm going to zoom down to the dashboard number 1. We remain in bearish normal, stabilizing here. It hasn't gone weak yet. Volatility starting to decline. Just one warning in EPP. IBM, Diamonds, Johnson & Johnson on the min pains. Max pains, warnings in Tesla, Disney, Alcoa. Yeah, my brother points out that was 10 months of no losses in the portfolio in a year when minus 30% was the norm. So that's an appropriate system for your longer term growth posture. Sorry. Let's go to the Dow Tactical. There's a lot of money managers wish they'd had no losses over that 10-month period. So there's lots of dojis. We're starting to see a number of auto framers coming in. Tesla's at 7-1. That's a combination of being far away from the 10-day high and declining volatility. Disney at 6.3-1. American Express at 4-1. So there's some value plays creeping in. Meanwhile, Cisco was the only breakout to the upside. The ETFs have even more available on the auto framers. Only one little breakdown today in oil. Not much to speak of there. We're just going to hit the snipers real quick. Yeah, AAP in the S&P is the only Godzilla. In our tactical symbol set, Ethereum and VIX. This is more evidence that volatility is declining. When you take the most volatile on the basis of the Z5, but then you see how many one-day quiet moves there are, that's telling you even the most volatile ones are stabilizing a little bit. And then the largest mover on the one-day Z-score is still only about 3.5 sigma, and we've seen somewhere that's 7, 8, 9. So we're seeing broad reduction in volatility across the board. All right, that's everything we want to cover for today. We'll get this published and posted. Take good care, and we'll see you tomorrow. Yeah, Target should be amazing because of its really bad earnings. That looks like a buying opportunity once it gets some traction.